There's something happening in the financial sector, and it's a news about the interest rate cut because recently the Federal Reserve cut their interest rate by 0.50 percent points, bringing the federal fund rate down to a rate of 4.75% to 5%. And this is the first time it is happening since 2020.
Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point.
The reason for this interest rate cut is to reduce borrowing costs and also improve economic growth. But the question is, what does it mean for Nigeria and the Nigerian government? Well, there are several key implications that we need to consider. First, let's talk about the impact on the Nigerian naira. A lower interest rate in the US can lead to weaker US dollar. So this means that naira in a short time will strengthen against dollar. And because of this, investors might seek higher returns in emerging markets like Nigeria. However, this also depends on the current Nigerian economic policies, inflation rate, and global oil prices, which are crucial for Nigerian economy. But as it is right now, Nigeria is currently experiencing a 40% in inflation. And if you check, we are currently having issues with the prices of oil. So do your maths. Secondly, we need to consider the impact of this interest rate cut on Nigerian businesses. Many Nigerian companies have loans that are dominated in the US dollar. So with lower US interest rates, these companies might find it cheaper to service their debts, which will reduce their overall financial burden. And this could eventually free up capital for investment and expansion, leading to economic growth for Nigeria and as well as some of these businesses that are domiciled in Nigeria. However, have it at the back of your mind that for this business to navigate this local expansion, it is also dependent on the current Nigeria economic situation. So for it to grow, the inflation will eventually eat up into particular loans that they are also bringing back into Nigeria to build something. Apart from these first two that I've mentioned, you might want to ask, what is the impact it has on the consumers? Well, the truth is, if Naira eventually strengthens against dollar, it means that imported goods could become cheaper. And this might help reduce inflation. So making everyday goods more affordable for Nigeria would be something that is achievable. However, it is a complex issue to discuss currently because the Nigerian government, as it is, needs to manage monetary policies carefully for them to ensure that any benefit from the stronger naira are not offset by other economic pressures, by rising fuel prices and many other things we are currently facing as Nigerians. And lastly, let's not forget the stock market. This is the best part of this particular video. You see, lower interest rates in the US can lead to increased foreign investment in emerging markets like Nigeria. So investors that are looking for higher returns might turn to Nigerian stock, which will boost the Nigerian stock market. Although for this particular improvement to work, it is important we keep an eye out for economic indications like political stability, economic reforms, global market trends, which also influences investors' decision. Well, having said that, lower interest rate also can impact infrastructure development in Nigeria because cheaper borrowing costs might make it more feasible for the Nigerian government and private sector to finance large-scale infrastructural projects, okay? And this will eventually lead to improvements in transportation, energy, and other critical factors that will improve the livelihood of Nigerians in Nigeria. However, like I said, you need to look at many of the indicators in Nigeria. What is happening in Nigeria? And check if it will affect us positively or it's going to affect us negatively. Well, the recent rate cuts by Federal Reserve has several potential implications for Nigeria if you look at it critically. From currency strength to business costs and consumer prices, it is a dynamic situation that, if the Nigerian government tries to take advantage of, will improve the economic situation in Nigeria and also help businesses in Nigeria grow. Well, that is the news, and that is my own take on this particular news.